My name is Michael Odundo. I'm a research associate in the research department at Standard Investment Bank. In the month of February, we saw the Kenyan market recover slightly, up 0.1% compared to a decline of 1.2% in the month of January. The slight improvement came on the back of price uptick of some banking stocks. Similarly, the NSE 25, which is the other index in the market, recovered 0.7% compared to a 0.6% slide in the month of January. In addition, the NSE 20, which is a price-weighted index, sustained losses, sliding 0.6%, and this was on the price downturn of some large caps. Equity turnover, which is the value of shares traded on the market, nearly halved to 4.6 billion Kenya shillings, and this was in the absence of the prior month's trades on Safaricom. In addition, in the month of February, we had a myriad of activities from the various listed counters on the exchange, such as Safaricom, which announced an interim dividend of around 58 cents, and the book closure is on 15th March. In addition, in the month of February, we saw I&M Bank waive their bank to mobile money charges, and we view that this move is in a bid to attract more customers, which will enable them to enhance their deposits, and we view this as a positive move. Other counters such as Car General also announced a number of things in the month of February. We saw them announce that they plan to change their year-end to December from September. We also saw them intending to purchase the remaining stake in a joint venture with international firm Cummins. In the top movers list, we had our usual large caps, which was Safaricom, KCB, Equity Bank, BAT. Notably, majority of the top movers closed in the green. We saw Stanchart come up 4%, Equity Bank up 3.4%, Coop Bank up 1.6%. Majority of the top movers which posted gains were banking stocks, and this was ahead of their full year earnings in the month of March. Hence, we're starting to see investors take up the counter and signal that the performance of the counters will be positive. We saw robust performance from the banks, and hence the positivity around the banking sector. In addition, Bamburi was a surprise top mover, albeit declining 5.2% to an over 2-year low of 24 Kenya shillings. In the top gainers list, we had Flimtree Group, Serena, BUC, Liberty, among others, and these are counters which are largely traded by retail investors, and they also experience limited supply at times. Hence, when there's demand and limited supply, we get to see some considerable price movements, and hence why they featured in the top gainers list. At the very top was Unga Group, followed by Kenyan, followed by TransCentury. Notably, Unga Group came down as a result of slipping into a half-year loss, and the loss was attributable to higher raw material costs and foreign exchange losses. We also saw Kenyan come down quite considerably, around 15%, and this was largely as the firm posted a 3% decline in their earnings. Stocks to watch out for in the month of March include banking stocks, as all banks are required to announce in the month of March. We've seen most banks post the highest income on certain line items in recent history, hence we are expecting record profits for the year 2022. Also, another factor that makes us bullish on the counters is their dividends. There are counters which are offering dividend yields of around 13%, such as Stanchart, and when you compare with treasury bonds, that's a fair margin. We're also seeing counters valuations come low, quite considerably low, such as Equity Bank, KCB, and we encourage investors to take up these counters ahead of their full year earnings. So we're positive on KCB, DTB, Coop Bank, ABSA. We've seen some of these counters increase their lending, especially digitally, and boost their income quite considerably, and hence higher income from their interest income lines. We've also seen foreign exchange income grow triple for some of the counters, even in light of the foreign currency challenges that the country is currently experiencing. So we're generally bullish on the banking stocks. We also have counters such as BAT, which we are positive on. even despite some downside risks of taxation which are impacting their margins. Also positive on EABL and Safaricom.